hello, hello, and a massive hello to everybody. Hope everybody's having a great day. Hope everybody had a great weekend. This is 50 Pips rocking and rolling, 24th of April, 2017. So here we go, here we go, here we go. No trade calls, no recommendations. Everybody's responsible for their own stuff. So here we are. First round French elections gone through. The world hasn't ended. Euro hasn't crumbled. Surprise, surprise, right? So I'm going to try and go fairly quickly because it's a fairly busy open, right? But again, interesting week coming ahead as the market will have to digest these European elections. And don't forget, really, there's some stuff on the data counter, but the main thing is on Tuesday, there could still be some funky stuff going out from North Korea. There's still tensions building, so that's a big uncertainty. And then we have Mnuchin and Trump that have been promising some, super huge bigly changes or whatever, right? So we'll have to see what happens on Wednesday with the US government, et cetera, et cetera. But again, I think they're playing a fairly dangerous game because fool me once, shame on me. Fool me once, shame on you. Fool me twice, shame on me, right? So if they don't deliver, it probably ain't going to look very good. So I think we have to keep an eye out on that. Right now, I think most people are giving them the benefit of the doubt, but in the back of their minds, probably very, very eager to take the opposite side if they don't deliver. So what's happening on Euro? If you look at Euro on the weekly, this is still hasn't changed. This is our chart. I'm using two different charts. This is our chart from last year. So coming into this year, this was our base case, right? Everybody looking for the Euro to end. Our assumption was that this was going to be the low, that as we get through Dutch elections, French elections, et cetera, German elections, you'll see that basically not that much to worry about, and ultimately we're going to get a decent bounce. First option was back into the two trend lines, and then possibility was to see much bigger move all the way back into the 119. I mean, this is a yearly swing, so there's still room to go, but so far so good. It's moving along quite nicely. We'll have to see what's happening. Now, the other thing we said in our Friday note, right, on the blog is we said, you have to keep in mind is everybody and their goldfish and pet hamster and grandmother or whatever are positioned short Euro. Whether you have to hedge because you don't want to get caught off guard, whether you're a pundit looking for the Euro to crumble, there's going to be a lot of risk to the upside, right? And bam, nice little gap up. So you see Euro still stuck here. If you look at the way this is trading and you look at these descending trend lines, it's pretty much back into a big resistance zone, but very classical action. So we'll have to see what's happening. I think most people are going to be looking for all these gaps to fill, and gun to my head, I would expect them to fill simply because this is just the first round, so there's a lot more uncertainty. But remember, they don't have to fill today, they don't have to fill this hour, they don't have to fill this week, but ultimately probably as we go through the second round, they'll end up filling. I think here a lot of people got caught off guard, and a lot of people will continue to get caught off guard trying to catch these moves. But really, in terms of the bigger picture, there's no point talking about 15-minute charts. But in terms of the bigger picture, Euro hasn't changed. We're still stuck here, right? A lot of offers in this zone, a lot of bids coming in. Ultimately, as long as the risk doesn't materialize in Europe, the path of least resistance is higher, and especially if we get a big puke on equities, we know the way this is going to unwind is higher too. So I think there's not an awful lot of edge to try and be structurally short on Euro, and you see everything else is gapped up quite aggressively. Now, in terms of crude, which is our favorite chart, our favorite short, we haven't seen an awful lot of move in the overnight session. Keep an eye on any bounce here on crude, right? We'd expect moves back into these 5250s to get sold, and ultimately we still think there's room to move to the 48s, 45s, possibly much lower. But for now, our first target is a move back into here on this failure. Okay, gold, what's happening on gold? So again, you just got the unwind, so you got a little puke on gold, but in the big scheme of things, not a lot have happened. And if you still believe there's going to be tensions in North Korea, Trump is not going to deliver, et cetera, any move back down into here is a little bit of a gift to position for more upside, right? So here tactically this morning, we like trading, fairly nimble longs here into the open, especially for the gap fill. This is the preferred gap fill probably to try and play on gold. We'll have to see what's happening, but this is still, of support here, and especially we've got a lot of uncertainty, so we'd expect the dips to be fairly shallow. And that's a similar thing on the bonds, right? So if you're looking to if you don't think they're going to deliver, the Fed's going to deliver, et cetera, any move back down, as we got these first targets to the upside on the bonds, you know, any move back into these 50s, this is all a buy for the next leg. Remember, we're still looking for this year, you know, coming quarters, we're still looking for 160s to come in and print. So any dip here is an interesting interesting position. Whether you're playing for the gap fill or trying to play for a position for a move back into the 160s, that's all pretty much still in play. Commodity currencies, not that interesting to us whatsoever. Remember, as we said on Friday too, in our note, our favorite plays were to be tactical on Swiss franc, right? Especially we've been talking about USD, Euro CHF a lot. Nice little pop here, looking for this to hold. Nice little action. So that's done and dusted too. What else we got going into this week? Again, DXY, keep an eye on what we said. Bam, done and dusted. Remember, our target was that we had to tag the 200 DMA, and then the fight was going to be on here, so that trade's also is done and dusted. We really can't complain. Here you'll have to see how this trades intraday, but any bounce back into the 100 that gets sold, a lot more weakness in the USD. If we can trade back above the 100, then chop, and we're continuing to play inside this broader triangle. But remember, you know, the market still needs to settle, right? But I encourage you to follow the blog. You know, you can sign up. We talked about all these moves and the updates and the notes, and so we really can't complain. Here on ES, you see even the gap up, right? Smack into that trend line. We'll have to see what's happening here, right? It's going to be fairly interesting, you know, hold above, then clearly, especially on looking for Trump to deliver, rip trying to take out these highs, and if he doesn't, it's going to get ugly. So I think here it's really flip a coin, decide what you want to see. Basically what it boils down to is if Trump delivers on Wednesday as he says, right, you'd expect those highs to get challenged, and you'd expect those highs to get taken out, off to the races, new highs for the year, everything's beautiful, go, 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 buy, 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 buy. If he doesn't deliver, we would expect this to get taken out with a lot of gusto, and we would expect us to try and move right back down into the 100, into the 200. We'd expect it to be fairly ugly, okay? Quick, but a lot of stuff to do. I hope this was useful, guys. Thank you so much for all the shares. Thank you for all the likes. Thank you for all the comments, all the emails coming in. As always, try to get back to everybody's ASAP. Treat people how you'd like to be treated. And again, have an awesome week. Talk to you guys soon. Take care. Thanks for listening. Bye-bye.